My name is Alex Nascimento. I teach blockchain business applications at UCLA and co-founded the UCLA Blockchain Lab. So I'm here with gratitude of fantastic guests, and we're going to talk about tokenization in the real world and what tokenization is and what are the interesting things in the real world that can become tokens and that can utilize blockchain technology to foster decentralization and democratization of investments. So I'll let my guests here introduce themselves. Take it along.
Hello, everyone. My name is Alex Tai, and one of the things that we were going to add to that was on there yesterday was that I'm also a partner of a blockchain foundry in California called 55 Foundry. 55 Foundry's very new enterprise, as most things are in blockchain these days, and it's our mission to create 25 pan-industry economy platforms in blockchain and utilities to support those. So we really are going to try and digitize and tokenize the real world. What we understand is that the technology is very nascent and that it's not necessarily ready for all of the applications that might be encompassed by these 25 or so different pan-industry utilities. But what we want to do is stimulate the use cases and the requirement and the development of those technologies and utilities in the foundry that we're building. One of the things that one of the things I've done in the past, as Director of Special Projects at the Virgin Group, was launch Virgin Galactic. And as we went through that program, which we started in 2004, I was lucky enough to become the chairman of the Commercial Spaceflight Federation. And we really were starting a new industry. And the one thing that became clear from that is I was on stage in 2004 and said we'll be in space by 2007. And only last month, on December the 13th, did we actually make it to space, was that sometimes you can't predict exactly how long it's going to take to get these things done. But it doesn't mean that what we're trying to do shouldn't be done, and we shouldn't get too dissuaded whether there isn't a use case or there isn't a technology, as long as we have a goal set which is correct, and we keep striving towards it. So that's me. That's what we're doing, and I'm very happy to be here on this panel. Thank you, Alex.
Thank you.
Yeah, good morning at this early hour. I think for Davos at least. It was probably a hard night for everybody. My name is Mark Müller-Eberstein. The name gives away, originally German. I live in Seattle. 30 years in the IT industry. I think I must have started at 5, I think. After leaving Microsoft, I wrote a book about the impact of technology on business success. And that led to the founding of EdgeTech Corporation. We're a consulting company out of Seattle. We're working usually with C-level executives around the world and helping them to understand how their organizations can benefit from IT capabilities, not the tools themselves, but what they actually enable. Myself, I'm a startup investor and an angel investor for the last decade, and discovered the crypto space about 5 years ago through the guidance of some smart people that are much smarter than myself. But being part of the traditional investor world, you get a lot of questions. What is a blockchain? What does it do? What's the difference between a stable coin and a utility token? So a lot of the friends, as I was kind of tired of answering the same questions all the time, so we wrote them all down. Gary Shapiro at CES introduced us to his, I think, 600,000 best friends and said, if you want to know something about blockchain, you're not in the industry, this is a book you're supposed to read. The trust technology, because I think really what people need to understand is we are on the verge of the next big revolution that is probably bigger than the internet. It's as big as the first accounting revolution, which created governments about 5,000 years ago. It's as big as the second accounting revolution out of the 1400s, called double entry accounting for the bookkeepers here. The foundation of our financial and corporate systems today. And I think now with triple entry accounting, where the transaction becomes the receipt, in a global and decentralized way, we have the opportunity to create a completely new and decentralized economy and I'm very excited to see where this is leading us.
Morning, everybody. My name is Ned Jacobson. I joined a little company called Facebook in 2027 and was running international business development and mobile for Facebook for 3 years. Then jumped into investing and set up a couple of funds called Spark Labs, the Spark Labs Group. It's a global seed fund investing all over the world, and a number of accelerators primarily throughout Asia, and Spark Labs in Asia. And through those investments, we did close to 160 investments. And my first exposure to blockchain technology was really through one of our companies that we invested in, and it went through in 2014, a little South Korean company called Blocko. And Blocko is South Korea's first private blockchain company. And they are today powering the private blockchain of LG, for instance, and many other bigger companies in Korea, and very successful. And seeing them building this, starting out through one of our accelerators, really blew my mind. And that's how I got dragged into it. And until today, we have been involved in investing in 6-7 different blockchain-related companies around the world. And I'm very excited about the future of blockchain. Less interested in the speculative parts of currencies and so on, but really, the pipes and the infrastructure being built for tomorrow.
Hello, guys. My name is Olga Feldmeier. As you hear from the name, a wild mixture of growing up in Ukraine, but then studying and working in Germany, German passport, Swiss residency. I started my career in BCG, advising banks, and then moved on to Barclays Capital and UBS. And as the time came when Bitcoin became popular back in 2013, of course, I couldn't stop myself from living my banking past and diving into Bitcoin. I enabled the first Bitcoin license in Switzerland back in 2015, and with that, media dubbed me Bitcoin Queen of Switzerland, which was super cool last year, and which I kind of don't even mention currently, but this will change again. And I created with other co-founders, we created a company called Smart Valor in 2017, and we are, in the simple terms, we are basically security token exchange focused on alternative investments. So basically we do two things. We tokenize real estate company shares, venture capital funds, and we distribute and create secondary markets for these tokenized assets. We are the biggest company in Crypto Valley. We are really in Zug. People are there, around 40 people, and launching the platform next month.
Good morning, all. Pleasure to be with you. I'm Nikos, and we're on a different spectrum than the rest of the people here. We're in the family office space and the traditional investment space. So we focus on technologies that are more, and industries that are more conventional typically. We focus on transportation, energy, distressed products, defense. And of course, we have a lot of discretionary capability given our orientation. So when there's something new and exciting, we want to take a look at it, and we actually find blockchain to be very exciting. There's potential to transform big business, and many of these conventional areas we're already in. In fact, I think cryptocurrencies may be the first and most mature application to date, but they will be maybe not the most important application of the blockchain in the future. So we've been excited to be learning more about the space and the companies in the space, and thinking about how these companies can become integrated in what we do and others do in the industries we're in.
Fantastic. I want to piggyback from Nico's point and to what is relevant for us to tokenize. And keep this very conversational, ask our panelists here, what do they think is the low-hanging fruit for 2019 to be tokenized? Among the various different things we could put on a blockchain, what, in your eyes, is what excites you the most to be tokenized in this year? Let's start with Alex.
There are some big global plans that I think maybe we'll go on to talk to later. But in terms of an industry sector, I'm very excited by the mobility space. I think the tokenization of mobility assets, be they cars, or train tickets or airline tickets, things like this, is a fantastic use case. So it's one of the platforms that 55 Foundry is looking at very closely at the moment. And we're working already with some large car manufacturers to work through how we tokenize the industry rather than just in particular brands, which I think is the important things. It's the collaboration with the tokenization which is the important, but mobility for me is one of the low-hanging fruits.
Very interesting.
So yeah, I think we will see tokenization in broad industries sooner than later, but not that soon. I think we often overestimate what happens in the very short time frame and underestimate what happens in the long time frame. I think a lot of large companies have actually realized that even for internal use, tokenization of their business process makes a huge difference. One of the companies we've invested in is Dragon Chain out of Bellevue in Seattle, next to Bittrex, by the way. And those are the developers from within the Disney organization that realize with so many different organizations they have globally, they need to collaborate. And they realize the potential and the efficiency of blockchain technology for internal use, but making sure that it's actually possible to leverage a public blockchain and their technology and their community as well. So bringing these two pieces together, I think will have a huge impact in the next 12 months probably.
Yeah, so I actually think that those areas that I find most interesting is illiquid assets that have irregular cash flows. So for instance, one example, a friend of mine, he has a boutique winery in Israel where I live. And his problem that he always run into is that you have this long period after the harvest before you actually can sell the wine. So it's at minimum 18 months until you actually can sell and cash in on your produce. And he's always trying to make ends meet. There's a lot of cost and so on. So what he actually launched wine on a blockchain, basically by tokenizing by selling futures on his bottles. So he gets in cash flow that he can basically use during this period until the bottle is ready. So it provides a cash flow for his winery, but on the other hand, it also provides value for the consumer because you know exactly what bottles you get, you know where the wine has been, what has been produced, what barrels. So it's provide a very close relationship also with the winery through this. So it works out both for the consumer and it works out as a cash flow for this type of business. And it's really interesting to see how the kind of the wine, or he's putting wine on blockchain is interesting. And there are other irregular cash flow businesses that I think this really can work out well for.
I would like to take a step back a little bit and maybe just contemplate on what are advantages of tokenization. And from there, we will see what are the most interesting use cases. So the advantage of tokenization is, of course, instant settlement, 24/7 trading, low cost, and basically this global liquidity that we create in an asset that is transferred on a decentralized peer-to-peer network, right? And from there, Plus combines this with an invention of borderless money, I call it, right? Cryptocurrencies, right? And now we arrive at the situation where anybody, anywhere in this world can own anything and can pay money without, your authority or your bank or whoever it is allowing this to do. And that was proven with ICO, which was actually a very interesting experience. That was the first application of this, global funding of global opportunities, right? And that showed us a way to this new way of capital formation, global capital formation, how capital can flow into business opportunities in an absolutely non-traditional way, right? And if you look at the institutional landscape in financial services, because we had different technology stack before, right? It was all centralized ledgers, right? Where, record of ownership is, so we had to create institutional landscape where everybody specialized in one function. So we had exchanges, we had, we still have exchanges, custodians, clearinghouses, dealer broker, all of these people, right? Because they needed to hold their centralized ledgers in order and exchange information and not to switch ownership and so on, right? That was needed. But now, as we have the same place where transaction is recorded and where the ownership is transferred is the same place, is a blockchain, right? So we don't need the separation of duties, right? And finally, we don't need those organizations, right? And I think, you know, what we are doing with tokenizing assets, companies, and so on, the key here is a regulatory adjustment that you know, regulator enables this new type of entity which combines all of those functions, that is exchange, custody, clearinghouse in one entity, right? And once this happened, right, we can tokenize everything cheaply. So this is the advantage, low cost of creating a securitized products, right? Securitization in a very efficient way.
Great. I agree 100% with Alex and Olga. So I think mobility is a great frontier to address. I think it's going to go through many transformations. People are talking about the future of mobility daily. And I think that blockchain becomes a natural synergy to all these areas that they're talking about, whether it's autonomous and other aspects of the future of mobilization. I think in mobility, the other, you know, I'm just going to, because I agree with Alex's comments, I'm not going to re-echo them, but what I will add is one more, so to speak, nuance to that I think is interesting, and we've seen that from our work in transportation. Blockchain has the ability to move from a centralized system to also to a segmented system, which is very important for the security of these transportation assets. Because if you can imagine that you have all these vessels in the water or all these vehicles, all of a sudden those can become weaponized. Protecting the integrity of that system becomes much more important, ensuring that that any attacks to the system, to that segment of the system, don't carry and proliferate throughout. So we're very excited to see what we can do with blockchain mobility. I also like what blockchain can do for areas like cybersecurity. We think about what's going on today and how attacks used to be in the world. It was this classical model of defense where someone would attack you, you'd figure out who attacked you, and then you would retaliate. And that's how countries operated, and that's how companies and industries operated. And that model, the way attacks happen today, has become extinct. Someone may attack you, you may never know who it was, they may be in a jurisdiction where you can't actually do anything about it, and there's a cost, and you may not be able to insure against that cost, so you have to take that cost on yourself. And that's an issue, and it's going to become a bigger issue. It's already a big issue. You had, you know, 2.6 billion data points or user data that was compromised just in the first quarter, I think, of 1 year. And I think that's going to keep going up. And not only will that number keep going up, the importance that users of the data and of their own data and how they feel about the cost of that attack on their data, that will become more significant, because I think what blockchain does is it decentralizes and almost democratizes data. So as people get more control of their own data from places like, which I think have the control today, like Facebook, Google, and other multiple centralized organizations, that's going to, I think, empower them to feel that they have authority over that, and then that's going to create an intrinsic value within them. So I think that'll be a big area. And then the last is any industry that faces liquidity, and obviously we participate in many of those in our history. I'll give an example of one, real estate. You have an issue where you may be putting up something, a big building, and you may along the way face that the need for liquidity. And as that need comes along, there's no good solution if you don't meet the traditional lending markets, or you fail to meet the other alternative capital opportunities out there for you. There's no centralized exchange where you can lease a portion of a building and get investors into that in a way that blockchain would allow you to do. So I think you can create these new pseudo exchanges and then really provide interesting solutions to industries that didn't have those before.
Again, and we shouldn't be all just agreeing with each other, but the fact is there are so many opportunities that blockchain provides for. But I also think that it's a confluence of a number of different nascent technologies. So it's not just the blockchain, but it's also the proliferance now of artificial intelligence and machine learning, and how you can apply it to these data sets, where these data sets are now immutable and trustless. And that's the real opportunity. So if you, rather than the industry applications, one of the things that really excites me is what this does for mankind. Because with the proliferation of other technologies, there's a broadband system that's going to come into place where it gives access to the entire planet. So now everyone will be digitized. So if now, and that's, you know, there are 3 billion people on the planet that don't have access to the internet. That's going to change in a year's time. 3 billion more people. Now, if everyone has access to digitization, then everyone will have access to a digital identity. And that's incredible because people don't have access to their own identity at this stage. And then once you have access to digital identity, you can have access to a digital wallet where you can keep deeds to your house or your passport or even obviously your assets. And that leads us to digital currencies and lifting people out of poverty and giving credit. The possibilities for blockchain are just immense when you start looking at the basic things that.
Exactly, and this is why we are talking about democratization of access, right? Because anybody, anywhere will be able to own anything. Like I normally hold my speeches about, evolution of ownership, because ultimately, this is what we are talking about, right? What we own, like 200 years, what we were owning, physical things around us. Then it transformed with invention of the shares, right? And electronic shares, exchanges. Now we can own something like Apple company, right? And tokenization is the next step, right? Where everything becomes not just electronic, but digital, right? And people through this network, internet access, cryptocurrencies, right? Get access to anything. I'm totally excited about it. Look about it, think about it. I grew up in Ukraine. We would never have a chance to own a piece of real estate in, England or like, Indian guys. Like, what do they give their daughters? Gold. Like, forget it. In the future, they will give them, I don't know, maybe part of hotel here in Davos, right? So I'm really excited about it.
So we got here different ideas, right? What should be tokenized first? But as we go around the world and everybody here goes to different conferences, we have great ideas about blockchain. But the challenges are much bigger than the ideas today. So I would like to know from the panelists here, maybe you could point one or two of what you think are the biggest challenges to achieve these great ideas that we think should be tokenized. What should we solve, one or two, to be able to go from theory to actual implementation of what you would like to see tokenized?
I think there are some common things that we need to try and sort out. And it's really the protocols. There are lots of different protocols. And I think we need to make sure that there's interoperability between those protocols so you don't get wasted effort as these protocols are built. There's lots of work being put into scalability and finality with various different protocols for use in blockchain. But if we can have a common interface between them and interoperability, then it means that none of that energy gets wasted. Also, we need to have some common agreements for packets for transactions, and if we can agree on that, that's going to speed up an awful lot of commerce, and also some common interfaces for identity. If we can get these things sorted out, then there'll be real accelerators.
If I have to summarize it in one word, it would be usability. I think investors like Nikos and I, we have a lot of options, and tokenization of traditional assets, it's a nice one. It's an additional add-on. But I think companies like Pundi X out of Jakarta that are bringing thousands of farmers into the financial system, your friend in Israel that has now an opportunity to tokenize and find new financial instruments for his wine business that just did not exist. Those are huge opportunities globally exactly for bringing those people, that billions of additional people into the system. But for that to happen, it needs to be simple. It needs to be easy to use, easy to onboard, and easy to participate. And of course, safe and secure.
Yeah, and actually a point we're talking about providing liquidity, it's not necessarily tokenization. Everything is not necessarily a good thing. Liquidity is not necessarily a good thing either, because liquidity often leads to speculation, and speculation often leads to disaster. And so we see a lot of people, and I'm talking about retail investors, even institutions, short-term span, not thinking long time. Sometimes being illiquid is actually the best thing you can do. You're sitting and waiting, and you're building value. But so I think there need to be protection for if everybody goes and investing in everything and you can own a piece of everything, without understanding all the risk you're taking there. Own a little fraction of a Mona Lisa, but even if that, even if it can, if it's not traded enough, so what liquidity do you have, right? If you can't sell it, there's not enough volume. It's not traded a token, so you're sitting a potential liquidity that you actually can exercise. And so there's a lot of risks with that as well. So not necessarily everything I think should be tokenized. It doesn't make sense to tokenize everything, but definitely huge opportunities for I think a lot of businesses or industries with irregular cash flows for sure. Real estate is a great opportunity. Registration of land titles. I know, for instance, in Sweden, I think this year Sweden is going to be 100% ready for registering land titles through the registry, which is amazing. And you can basically, the way it works in Sweden today, you have to go in and register. Both people have to sign, and it costs a lot of money. So basically, you can sit in LA and you can sign over. You can sign for your land title, not being in the country, which is super efficient. Another great example, I think, is it's a company called SKUX in the US who's taken on the coupon business. Today, they're actually coupons, all these coupons that you find everywhere. They're being printed and distributed. You go to the store, you sign it off. Then they collect all that paper. They transport it to Mexico. And in Mexico, they sit and register all this stuff. And until that information comes back to the company who actually provided the rebate, that's super inefficient. And they're basically tokenizing everything, and they're providing real-time data for you. Go into the store, you pay, you get a rebate, and you see immediately the conversion rates, and you can adjust. A very interesting business as well, very efficient.
So maybe from practical perspective, like what we are tokenizing currently, we are working on several pilot projects, so to say. Well, first of all, Mark, I have to disagree with you. User experience, I mean, please, guys, all of you, log in, www.smartvalor.io. I mean, it's basically the same as your online bank, right? There's nothing new. You wouldn't even know there is a blockchain behind it, right? You see a wallet, you see tokens listed, right? But what is the challenge? So we are currently, just to give you an example, maybe somebody of you heard about Space Fund. So Space Fund is a venture capital company in US that invests in space technology startups, right? And we are helping them to tokenize and distribute these tokens. Now, of course, I agree liquidity is an issue, but for a lot of people, access to venture capital or even private equity, the decision, do it or don't do it, kind of would depend if there are at least mechanism to transfer ownership. How liquid it can depend, right? But we create a new mechanism. We built something called smart contract-based auctions. So this is specifically for less liquid assets. This is not something that is traded every day and there is a flow, right? It can be like once per day or once per month. If you own a part of the space fund, right? And I don't know, you met a nice girl and she wants to, build a new house and you need liquidity, right? You can basically open on our platform, you can open an auction, you can say, well, I'm selling 10 tokens in space fund. This is a minimal price, this is a period of time. And what we do, we send all the other users that are interested in this asset category notification, by the way, Mark opened an auction, do you want to bet, right? And this is just an example, how we create a new market mechanism, right, to transfer ownership that never existed before. The other case that we are working on is, real estate development project. Development project is more interested. Again, here you tokenize just a portion of it, right? Let's say 20%. 50% is funded by bank, other people, companies put in another 20%, and 20% get tokenized. And this tranche is more liquid, and it has liquidity premium, right? And another example are the companies, so shares of startups. So we focus on early stage tech companies, right? And it's kind of logical if you're in tech and you're issuing shares, why you should do it in traditional way.
But sorry to interrupt. Those are all great opportunities. But what are the challenges? What do you do to get there?
Well, actually the challenges are not on technical side. It's, to create a smart contract replicating a simple share.
What about
it's not
RegTech?
rocket science. Huh?
What about RegTech?
Yes, exactly. So this is exactly the point. Like we have two ways to do it. Either we go through traditional ways. So, and you saw probably companies in US like T0 and Open Finance, right? Those are tokenization and distribution networks, right?
again, we take a slightly more holistic approach to the situation, and we're looking at what's going on. And I think long term for blockchain to work, like many other technologies, it cannot be expensive, it cannot be volatile, and it has to be trustworthy. So, just delving into what I think the actual problems are and why these issues, why I use these words to describe what I think are the issues. The economics of what we saw being the most mature application, let's delve into that for a second, Bitcoin, had some challenges. And one of those challenges is that you need to pay miners increasingly more to mine more and mine more efficiently. But that also creates, the more you pay them, that also increases the incentive for them to cheat on the system. So they need to understand that the long-term payout for them to not cheat on the system is greater than the short-term payout. And then you have the challenge that as more is mined, and we're getting close to the point where we may have, in the current system, we may have all the mining done. You move to a transaction fee-based system, which again has these incentive fee problems where first of all, you may have some users drop out who weren't willing to pay, they weren't paying before. Then you may have some users who want to pay to get something done quicker, but that may not actually get it done quickly enough for them, and they also may drop out of the system. So you have the systems issues. You have energy issues, right? So if you think about what mining has done and the need to make quicker mining, people are investing more higher performing supercomputers and chips. That needs more cooling. That all requires more energy. I was reading this interesting statistic that the energy required to do all the mining in 1 year is more than the whole country of Austria, right, uses in a year. So it's a significant contribution to the energy table, and that we need to think about.
Yes, but you can use it to warm houses in Siberia and plant tomatoes.
Sure.
All of this exists, like folks are doing this. This is
Sure.
really.
And the other
really
thing that we find, to be something to think about is you look at what has happened so far in the industry and where we're going and how we've done transactions and deals to date. And the basis is that I know, any one of you, right? Which you, Ned, or Alex, and I trust you, or I've come to trust you, and then based on that, we can have an exchange of whatever deal that we're trying to create. And if that doesn't work, then we know there's some central mechanisms to kind of regulate that and to get us in check. Well, this is, you democratized the whole system, but you also change the concept of trust. You flip it upside down. And I don't know who is that party anymore who's verifying this transaction or who I'm interacting with. And that has its own challenges. For example, if I'm a large corporation and I'm thinking about bringing blockchain into my ecosystem, I may not be okay with a third party doing the ledger validation. So then, I may result to an internal database because I want to do everything internally and more centrally, and that doesn't take advantage of the full benefit. So I think the issues of trust, consistency, and cost are the major hurdles to get adoption.
Yeah, but just add one thing. We talked a lot about before smart contracts and so on, and everybody is crazy about smart contract is solving everything, and guess what? It doesn't. Even real estate that everybody talks about, we have a smart contract. If I live in Germany and I'm selling an asset in real estate over token to somebody in the US, there are so many issues that can't be gathered into an automated or even actually the problems with legal contract is not so much what it's written in them, is all the things that they don't cover and have to be solved somehow. So it's not so straightforward. I definitely believe it's the direction, but it's a little bit more complicated. And so there are legal issues, especially trans-border transactions. If we take an example from the art industry, for instance, we're talking about actually tokenization of art, where you actually get the what you call the provenance of making sure that this is the Picasso and it's all the information is there and tokenized and so on. Guess what? It doesn't work like that really, because once in a while there are updates. They find out that the paintings wasn't made by that painter. And how do we update something? So tokenization, that only works, is only as good as the information being put in there from the outset. And so what do you deal with all these cases where you need to do updates eventually as you go along? So I think that's a big challenge and different for different industries, but those are two of those challenges that I see there.
So garbage in, garbage out, right? So one of the things I would like to propose, since we had such a fruitful discussion here with different points of view of what should be tokenized and what are the main challenges, what do you guys suggest as being the first thing we should solve? Like, where's the starting point to solve these challenges? We were having a very interesting conversation this morning and doubling around the fact that maybe identity is the starting point, where you would create an environment where people would have this common identity, where you're clearing the good actors from the bad actors, and then you could start building an ecosystem that will solve these problems. But I would like to hear from you guys. What do you guys think that would be the first step that we should start solving?
Exactly, to your point and the conversation we had earlier, which we'll share, is in building these 25 pan-industry economies, identity is probably one of the main issues across all of them. So we do need to solve for identity. If we have a mobility platform with an autonomous car, and you buy a token for that particular ride, how does the autonomous vehicle or that tokenized model know it's you that's bought that? So identity is really important that we solve for. And the other utility that is required across all of these is also a stable coin mechanism, because with the issues that we have around the fluctuations in the value of the tokens, if you tokenize your wine, and you buy that token and you pay your €2 or whatever the equivalent is, but then you find that that's only worth 50 cents, or it's actually going to be worth €2,000 in the future. That's a fundamental flaw in that economy, and you end up speculating rather than buying the asset. So we have to have a stable coin.
Yes, I would add decentralized ledgers, like as another infrastructure layer, right? Because if you want to transact in those issues, somebody called Sweden, right? So we need actually this decentralized ledgers for any kind of ownership, for shares, right? So now we have, DCCD, like all these centralized ledgers where record of ownership, right? So that's probably another one. And basically currently, I mean, look, guys, it's actually working, right? There was this huge, resort in Aspen hotel, was tokenized, sold. There are at least 5 venture capital funds that are tokenized, sold. There are a lot of security token offerings. This is already happening, right? It's just like the question for us: how do we scale? Because being a platform, this is a very difficult business model, right? You need to attract asset issuers, good asset issuers, and you need to attract investors, and all of this at the same time, right? And the ultimate solution to this problem on the technology side is actually decentralized exchange, right? So where we can give access to Japanese clients that went through KYC in Japan, and they see our asset, and Japanese and Swiss investors see the other asset, and they can all transact on this decentralized ledger. But guess what? The problem is, well, regulation, because I am responsible for every KYC case that we do in Switzerland, and if I don't know like how the client in Japan was KYC'd and there is something wrong, it's me, who is responsible for this. So it's kind of like technology gives us this global way to transact and move value, but regulation is still kind of, light years away from this, right? So
Yeah, I want to pick up on a point, Olga, you made earlier. The technology challenges, I think a lot of them will be solved sooner than later. I think we're getting to a point where it will be sounding as ridiculous as my application works with a database, or my application works with the internet, my application works with a blockchain. It's just one of the tools that are making a new business scenario possible. And yes, the regulations, I think the situations we have between, as I said, the US is horrendous, because there's just simply no clarity out there. There are jurisdictions like Switzerland, like Malta, like Singapore, where I was just, where they are much further ahead. And I'm also, I agree with you, I think identity for people. There are billions of people who do not have an identity, but it's not only the people, it's also the devices, the units, the things they use, that provide data. All of those things, I think, have tremendous challenges and opportunities for us to solve, and I think we will see some interesting models coming out of this very soon.
Yeah, I think also some of just general business things like growth and scalability. There are so many companies in the blockchain space that is working on similar or variation on a theme of solutions, and it comes down to trust. Why should I trust this startup? Until there, and we've discussed before, until there's a certain adoption from a bigger player, and you start feeling, okay, it's just like the bank is secure, the money there's a certain insurance for the bank, the money I put into the bank. I feel I can trust this company because this technology's platform is being used by whoever is using that one. It gives a kind of approval of stamp. But it's there's a jungle out there today, and so it's a matter of trust. It comes down to basics, basic human things: trust, scalability, waiting for the platform to take off, growth, seeing that it's really critical mass, and you can actually trust it for your business.
Just one more point. I think trust is, you mentioned trust, and I think it has a lot to do with governance. And we're seeing right now experiments in governance. We have seen the anonymous Bitcoin world, as who is making decisions of what's happening with Bitcoin. It's the miners, it's the community. We're seeing the MakerDAO examples of how community could potentially be managed. There's a lot of interesting experiments going on. I think we are learning, and we will see some interesting things.
But ironically, what happens is kind of regulator want to enable this innovation, right? So in Switzerland or in Liechtenstein, example, they have now something called like small banking license or something like this. So we applied for this banking license, and it enabled us to basically be banking institution with just 1 million capital requirements. So we kind of like moving from technology to become this kind of, traditional institutions in legal sense. So I think those worlds are basically merging and coming together. So
I think education, clarity, stability, education of the investor and the regulators, clarity. I think you have, for example, ICOs in the U.S. They don't necessarily have the same disclosure requirements that other companies that go public have. So that creates this legality and legality at the same time, and that creates confusion when institutional investors are confused, they don't invest. Stability, again, I mentioned that as a challenge, but it's also part of the solution. We know how to make things stable, right? We've had experience with financial markets for many years, so it's easy to fix these last two things I just mentioned. So doing that, and I think when you really bring that, these will be the levers to unlock the doors for big-time institutional money to come into the space. When you bring that money into the space, then you have a huge enabling factor for any solutions and other things that go moving forward.
We have about another 10 minutes, so I'd like to open to the audience, see if anyone has a question. The gentleman over there in the back. Do we have a microphone for him, or? Thanks, Olga.
It's on. Yes, it's okay. Just, I want to check with any member of the panel, or especially with Nat Jacobson, because you are talking about the tokenization of assets. If you are talking about buildings, fine. But if you are talking with agribusiness, like crops and wineries, I would like to know how you guarantee the risk of the financial risk, because if in case you have any disaster during the crop, what would be the result? You cannot, on the tokenization, you receive the cash, and then what you do if you have a crop disaster?
Yeah, I mean, I think there are definitely problems with that, like you mentioned, that haven't been solved. There are other issues as well. Just like you say, if there is a problem, there's a provenance. You buy. What if the wine is bad, right? It could be a terrible year. You buy the year, it's supposed to be good, great Cabernet Sauvignon, whatever, grown up in a certain place, but it's terrible. I mean, there are issues. All those are issues. A piece of art you buy, you thought it was a Picasso, but it turned out to be an imposter. Somebody copied it. There are a lot of issues that, at the end of the day, boils down to the input of information from the outset. So I think that, apart from in agriculture, I don't know particularly. I don't have any experience with that, but it's definitely.
Now, let me jump into this. I think issues of crop insurance, for example, those are issues that are solved already in the industrial world. In our world, there's insurance for crop, and there's all kinds of financial instruments. If you're farming soya beans in the U.S. or rice somewhere in Japan, all of those things exist. Where they do not exist is for the small farmers that do not have an identity, that do not have access to the international financial system. They carry the risk today of their crops, their little rice farm somewhere in an island in Indonesia, of that's going bad. There is no insurance available for them. They can't protect themselves. And that's why I'm saying, thinking companies like PundiX, for example, they're creating these basic infrastructure systems for people that do not have a choice today to participate in the tools that the financial insurance systems are offering today. So we're bringing billions of people into the security and the environments that most of us in the industrial world take for granted today.
I agree. There's actually, because of blockchain and because of the issuance of smart contracting, we can actually put more insurance in place for that. So, for example, with a mobility token, you can actually now smart contract the ability to work with any numbers of people in an open and decentralized marketplace to bid to insure a particular journey. So, it could be any number of different motor insurers that said, okay, I will insure your journey here from Davos to Zurich Airport. And you can dictate for yourself how much you want to be covered for. And that was previously not available. But because of the smart contracting and because of the blockchain and because of the decentralized system that's there was a member of the GBBC here that's insuring deposit transfers. So if you want to send your money from first world nation to your family, wherever that is, at the moment that's difficult to do. But he's providing insurance, a product to provide insurance for that. So you can now move funds via the blockchain in a tokenized way and ensure that gets there. So I think it's now become a more secure thing. You just insure your token for your wine and build that in. And someone will pay, saying that there will be an insurance provider that will say, okay, this is my actuaries worked out. If I charge this amount of money against the possibility of there being a flood and destroying it, I'll pay out. So it's opening up more industries and providing security.
And that's maybe the solution. You require insurance for all these tokenized products, right? If people forget, especially in the US, the FDIC insures all depositories in the banks up to a certain amount. I think it's 250,000. Used to be 100, but after the financial crisis, they made 250,000. So I think that's an easily solvable problem. The one caveat and the one thing to always consider is cost. Insurance also adds cost to what you're trying to do, so you have to incorporate that into the solution and make sure that once you do everything, you're still coming at a better cost point than before.
Very good. Well, do we have room for one more question? One more question.
I'm Rod Bechter, former CEO of ICANN and former director of the U.S. National Cybersecurity Center. So, I'm a big believer in the potential of blockchain and tokenization. I'm also extremely skeptical, and I see a lot of junk out there, including in the security field. So, my question is about specifically tokens designed to facilitate ID and security online, not the securitization of assets. What do you see actually working today? I mean, what security or ID tokens have an active market, or what do you see as most promising? I'm just curious because I'm still waiting to see the real success cases in the space.
Maybe I can address this. So if you look at private shares market, right? Look, the numbers are really amazing, right? It's basically, even if you take just US company, we're talking about 270 trillion, right? Publicly traded equity is about 80 trillion. So it's a huge, huge market, right? Illiquid, intransparent, inefficient, right? They start to tokenize.
We could
those
debate
shares.
that.
Yeah, but this is what we see, what is working, this the whole ICO discussion is switching into STO, right? And I think this is a new way how we're gonna own companies, right?
I know the securitization is going to happen. I'm asking more about secure tokens that are oriented towards adding security to transactions, not insurance, but sort of verification, ID, et cetera. There's quite a number of these that have come out.
No, I think the question, the point you're raising is absolutely critical, but it's also important to understand it's not necessarily competing with these existing systems where we have a lot of security challenges, but also solutions and discussions already.
So I just want to hear success cases.
Last year here in Davos, one of the key discussions was about refugee camps. They have hundreds of thousands of people providing ID payment systems based on blockchain implementations. Are they as secure as they could be? Probably not. But are they better than nothing? Very likely yes.
I'm not debating that. I was looking again for tokens in security-related markets.
Well, one example is very practical, right? What we do is kind of like, depending on asset class and investor accreditation that is needed. For example, I cannot sell somebody on the street token backed by venture capital fund, because this type of investment is only appropriate for, you know, wealthy people, right? So we have this built-in compliance, right? And this built-in compliance, it works like this. So your wallet is categorized if you're accredited investors or if you're a retail investor, and basically the token offering, you will see only the token of, and this is all governed by smart contracts, right? So there are first elements, right? And we will build element on element. It's a process, right? It will take 5 years.
And some of these are being deployed, and I think I think what we're not doing as an industry, because we're not that coordinated at this stage, and that's one of the things, the opportunities that the GBBC has, is to talk about some of the great success cases. So people are saying, you know, this is a solution waiting for a great problem. You know, that's absolutely wrong, because there are fantastic solutions being addressed to real problems right now. So, for example, one of the members of the GBBC was telling us over the last few days how he's providing a merit tokenized currency for the entirety of Cambodia. You know, and that's being deployed. So he's talking to 33 banks about how that can be put out, and that's pegged to the local currency. So you have sovereignty for that government, which is going to be an issue for any currency that's brought out, and it's in play. And what it allows the Cambodian government to do, which has previously been backed by the US dollar, is to affect its own fiscal policy again. So it's a fantastic use case.
Absolutely.
Something that's happening.
Just share one of my opinions. I believe every OECD country will have a crypto version of their national currency within 20 years. It's just going to happen.
Mark, we have time for one more question.
One more
And I'll
question?
ask it.
All right.
Mark, I haven't heard from you. What would you tokenize first?
Personally?
We haven't heard from you.
Of course. So my research at UCLA focuses on security tokens, which is an area that I'm very passionate about. I would say that obviously bringing those issuances into the blockchain is a key one, but I gotta agree with Alex. If you don't have a level of identity on this, we're just gonna continue seeing the people that can access venture capital deals accessing venture capital deals. You're not gonna see the democratization that the technology promises the world. So in my opinion, I would go back and start with identity, which was one of the great discussions Sandra and I had with
Why,
the
guys? I
Estonian
really don't
government.
understand this. Like, we are doing KYC and AML. You come to me, we store all this, and we can sell you security.
But you do
Why is
KYC
the
and
problem?
AML for people that have bank accounts.
No, for everybody.
So if I don't have a bank account, how are you going to do a KYC and AML me?
Well, I need your passport and your utility
What
bill.
if I don't have a passport? It all starts at the identity level.
No, but in most countries you have some kind of identification document.
We're talking about everyone, right? The whole idea here is a decentralized environment where we can touch everyone on the planet.
But
You
everyone,
can go
those
to
people
Silicon
don't have
Valley
money.
and sell shares of private companies and funds to everyone we know there.
Yes, but those people have no money. If they don't have identity, they have no money to invest.
2.5 billion people on the planet that don't have access to a bank account, because
But that's
some
okay.
people don't care about them because they haven't got enough money to make money. But they should have access to that. They should have access to that own
No,
identity and access
I
to,
don't agree. They don't need a
wallet.
bank.
Of course they do.
Now
Of course
we
need a
have
bank, yes.
cryptocurrencies.
No,
It's a
they
have
need,
wallets.
human right.
they need
We
to
were
have
lucky to be
ability to
born here.
participate in the economic systems in the world. So for lifting themselves out of poverty
No, in China they
and
they
providing
have
to the global
WeChat.
growth as well.
There is WeChat, there is Alipay. They don't need a bank account. We left this space, right? We kind of but now we have wallets, guys. Wallets are substituting bank accounts, right? And to have a wallet, you don't need a
In
bank
developed
account.
nations, for sure. But I'm a Brazilian-born American, and I can certainly testify that in developing nations, the gap between of the ones that have and the people that don't have is enormous. And the way it affects like the whole ecosystem is detrimental to everyone in it. So
Just one case. So even in the developed nations, I watched a panel where a lady was talking about identity, and that she was walking out of a 5-star hotel in New York, and there's a guy that sits outside there that's a 60-year-old guy that lives on the street, that fought in the Vietnam War, that doesn't have access to identity. He's lost his passport. He's got no identification. Because he has no identification, he doesn't get any VA payments. That guy doesn't have his identity, and he's sitting outside in one of our biggest megacities of the world. That's the sort of person we need to give identity to. And the Rohingya refugees and the displaced people of the world and the 2.5 billion people that don't have a bank account and the 1.7 billion people that don't have access, and the 3 billion people that don't have access to the internet.
I agree with you guys. It's just wrong to say that tokenization of real assets is not going to work without identity. It's working now, right? And we're using the legacy identity mechanism. It's still working, right? It's a different problem we need to solve to give access to everybody. But, you know, it's not like precondition.
Okay. Well, I see we got more people in the room. Maybe we can open for another question. Right, the lady over there.
Sorry, Monique Morrow. The identity, the digital, this is just a comment, not necessarily a question. The digital identity piece is so important when you're talking about banking the unbanked. And this is a space that is very ripe for disintermediation. I work with refugees, by the way, on one hand, and I'm looking at folks who are wanting to participate in the economic piece of society, because without it, they cannot be part of that. In fact, there is empirical evidence to suggest that even micro payments are enslaving people, because, for example, women in very, very small communities know how to game that system, and they're borrowing, and it's not what the vision was. So my point here is that digital identity is extremely important. And I think, Olga, for you to understand too, this is a very, digital banking, this is a very, very, for unbanked, a very, very demanded space to get involved in. Thank you.
Because that was more of a statement. But thank you. Really appreciate it. Question.
You touched upon how regulation sometimes has to catch up, but I want to also understand from any of you on the panel the collaboration it takes, and with which industries, which partners is it important? Are you reaching out to government? Are you reaching out to different parties in industry? What does it take for your use cases, and are you finding the willingness? To your point, Nikos, about sometimes you may have to educate people. Is there a bit of people not skepticism? So I just want to better understand that.
So Alex made the point earlier. I think it's very important, the part of education, I think, that you mentioned. So personally, I'm from the state of Washington, so we work with the governor, the lieutenant governor, political representatives of all parties to try and, even the DFI there, it's the local version of the SAC, to trying to help them to understand how important it is. And yes, there's a willingness to learn. Does it fix it? No. We just had another startup that out of $1 million they're trying to invest, 300,000 went into the product, 700,000 went to the attorneys. And that's just not the way it needs to be.
I absolutely agree. In a previous life with the space industry, we were looking for a regulatory backdrop that would allow us to sell tickets to people to go to space. And the hampering that we had was that we were in a developed economy where you had a certification of an aircraft, where there is a probability of 10 to the minus 9 that you have a catastrophic disaster. And there's no way we could build technology that was going to live up to that veracity in spaceflight. So what we went to do is we went as a body, we coordinated through the Commercial Spaceflight Federation, and we went to the US government and we lobbied, and President Bush at the time signed into law the 2004 Commercial Space Launch Amendments Act, which gave us the ability to just say, look, it's this dangerous, and I'm telling you it's this dangerous, now give me your money. And that gave us the regulatory backdrop to work. But the great thing was that we circumnavigated all the people at the Federal Aviation Administration and said, look, it's this body that should be regulating you or that body regulating you. The Department of Transportation directed the FAA to start a new organization to regulate that. Now, this is possibly what is needed in the United States, because you've got a turf war between the different regulators who want to make sure that they're the people that are doing that. So possibly that's the way through, but what we need to do as an industry is to coordinate and then go to the regulators in these countries and say, this is the standard, this is what you should do, and this is how you can protect people.
And in Liechtenstein, they even have virtual digital asset regulation coming into place. Like, you know, how the ownership rights are, you know, initially in the token, and the civil law needs to be adjusted to this tokenized economy. And again, this is done in collaboration with us, with startups that are, you know, working in this space. So that's amazing. I think we live in exciting times. This is a time, you know, to do it, to shape the regulation, to shape, you know, how the future of ownership and of financial assets is being changed. And yeah, so that's exciting. Thank you for a good question.
Yeah, my 2 cents on it would be, you got to work with the U.S., right? If the U.S. operates 40% out of the equities and the bonds market across the world, I don't know about you guys, but if one guy dictates 4 out of 10 trades, you got to work with that guy, right? Or else you're too minuscule and too small to really make a global impact. So I agree with Alex. I think it's an effort of us all coming together and trying to find a space where we can work with regulators and work with big banks to try to find a way in developing sandboxes. Singapore is a great example of like creating a sandbox where startups can operate.
My question is, so Vitalik really shifted and changed the crypto world when he added smart contracts to Ether. You know, huge insight, but that's really smart contracts 1.0, and any new system you create has limits. Some of you referred to the fact of these limits in the current smart contract systems. There's a ton of new smart contract platforms under development out there. I'd love to hear from the panelists. What do you think are the most important innovations you want to see come out in those platforms, and what are some of the emerging technologies you're most excited about?
So I think one of the problems is that there haven't been actual economies built in these areas. That people are focused because of the ability to speculate on a token and get on the decentralized application and the use case, and they've said, I'm going to issue a token on this particular use case, and you know, you buy some of these, it's going to be worth a lot of money. And it was pure speculation, and the whole industry suffered from that. What needs to be addressed is to actually build the economy layer and to convince through collaboration the players to put their assets onto that layer. Now, there are certain protocols that look like they might work well for that. There's a new one coming along in Dfinity that I happen to like. I think it's got some great possibilities with finality and scalability, but there are also other ones. There are other protocols out there. And I think what is important is going to be the interoperability between these different protocols. So look, the technology, as I said, you know, right at the beginning, is nascent. It's not there yet, but it's coming and it's accelerating at a great race. We need to make sure that any effort that goes into these various different protocols and the economy layers don't get stranded, and ensure that there's interoperability.
I think while the technical questions are important, it's more a community question. But I think that if we have learned one thing over the last 20 years, the open source community has completely outperformed the traditional development organizations. I mean, I remember when we had Cinex and AIX and Sun Solaris and all these kind of Unix derivatives. None of them, with all their corporate power, were able to compete with the Linux system. So I think we will see a lot of innovation coming from the community, and whatever platform or platforms can actually motivate the people to bring their best to bear, I think will solve a lot of more problems than the ones that are unfortunately not being able to do that.
You were looking for use cases, right? I'm a big fan of the new ERC 1404. I think it's is a seed. I'm not saying it's a solution, but it's a seed going into the direction of finding a token that could interoperate among different security platforms. I don't know if you guys have like other
absolutely.
technologies
This
that you
one,
guys
and
find
there are
interesting.
a lot of different approaches, and you know, also the protocols for issuing of security tokens, right? I mean, basically, it's a set of smart contracts that describes how this tokenized share work, for example, right? And what we are discussing, maybe a little bit insider perspective, what we are discussing, of course, all of us, there are several tokenization platforms, right? So differences, like some people just do tokenization, so they write a smart contract and create this tokenized. And some people, this is the other type of players, their distribution, their exchanges, like us. So So among those tokenization platforms, currently there is a discussion how we agree on a common standard, right? On a common protocol, right? So that if you issue this token in that way and I issue the token in that way, we can still create a global liquidity and trade it, right? So it's kind of like a little bit up to us now to like throw away our ego and say, well, maybe my protocol is not better than yours, let's just use yours, right?
I was just like, I'm wondering, is it not time to have legislators, more legislators from around the world at this event? Because I'm seeing a lot of technicians, a lot of people talking expert, becoming expert, because no one, I think, is really we're discovering. But I'm thinking, it wouldn't be nice to have legislators not to, just to learn the curve with you guys. So by the time, because I'm a journalist, and what I see that sometimes a lot of people would work for years, and then the politics come in, and then a lot of things have to change, especially when it comes to digital identity. A lot of legislations will come and tell you guys, well, 50% of what you have done doesn't fit my country, doesn't fit this and that. Wouldn't be really more encouraging for the time that we are going to be working hard to get to where we want to get, to have legislators with us right now to learn and to bring their input?
I think, as I said earlier, I think we are all, as a community, need to work with our legislators on, for sure. And they are participating in some of the events, yes. But I think, as Alex said earlier, at the end of the day, real change is made by people that are saying, this is how it's going to be in my jurisdiction, because we cannot educate everybody and unfortunately get them on board and making the right decisions. And that's why we are seeing today a competition of countries and legislative systems to make it easier to fostering the industry. You have Singapore on one side, or Switzerland, for example, where people understand and try to drive the ecosystem. And you have, unfortunately, or Wyoming, for example, in the US, the data organization, Caitlin Long, did a very, very good job there to really engage with the legislators and driving it through top down, making sure that everybody is on board. But unfortunately, there are far, far too many jurisdictions out there where it's difficult. And I have to say, there's a lot of the attorneys profit tremendously from the insecurity. They are having huge bills and taking a lot of the money that is raised by those companies to trying to be compliant and trying to do the right thing instead of investing it into products. And I think a lot of companies realizing that and trying to go to jurisdiction where they can actually focus on the products and on the communities and not only on the legal fees.
It's actually disadvantage. Smart Velour was created 2 years ago. Our total legal bill is currently 50,000. 50 in 2 years. We received 3 licenses. We are almost done with banking license. This cannot be even imagined in US, right? You would spend millions already for this.
For sure. Let's have closing remarks, because I think we are at the end of our hour. Nikos?
Just a quick comment on what you just said. I think that, it depends on what legislative system you're in, but overall, the answer is always more people who are involved and engaged, the better. And that's the investors, that's the legislatures. I think the big challenge when you have decentralization as being part of the solution and part of the benefit is how do you create centralized influence? Because that's what legislators pay attention to. So getting their attention is easier if you're part of an industry. There's 5 large corporations or 10 large companies, and you represent a large number of consumers and clients and products, and then you take that to them. You have their attention at a more readily level. Now it's going to be more of a challenge, and that's why I think it's important for all of us to come together and reach out to them and the people we know. Overall, I think it's fantastic that we are coming together and that we're discussing the various issues. I think the more we learn from each other, whether it's the academics, whether it's the investors, whether it's the people who are practicing technology in the space, the more solutions we will discover and the more opportunities we'll discover. So we're here to learn, and anyone who wants to reach out to us, please do.
Yeah. So in that way, thank you to GBBC for organizing this and getting us on board. Pleasure to be here. And
yeah, I mean, I just find it's an extremely fascinating area, and just a very close. Actually, I worked 1.5 years ago on a project together with a professor in virology from Amsterdam University, and he's one of the experts in the world on viralic epidemics like SARS and so on. And he was so frustrated by the fact that academics don't want to share information because they're afraid of their research being stolen, The problem is when you have an outbreak like that, you need to act fast. So he started to work on putting it on a sharing information on the blockchain in order to improve and for academics to work and work faster to fight those viral outbreaks, which I think is an absolutely brilliant way of doing something good in this world. And I wish I could see more of those examples, especially in the medical industry and research.
Yeah, I think decentralization will unlock a lot of the potential of humankind, and especially in areas we haven't seen them. And I think there's a lot of challenges we're overcoming, but panels like this, events like this, the GBBC put together, hopefully, or it looks like bringing us together and addressing those opportunities. And I think quoting Adam Draper, I think he said in the blockchain space, he's always finding the smartest people he has never met. And it's all about us to learn from each other and trying to drive things forward. So I appreciate the discussion.
So this is being defined by some as being the fourth industrial revolution. I think we have to understand some of the problems from the previous three, and the previous three have got us to a point where it doesn't matter about the commercialization and how we might use it to to grow economies if we don't have a planet to live on. So I think one of the biggest use cases for an immutable transparent data set is to take some of the data that we know about the planet and apply artificial intelligence and machine learning to solving some of the problems that we have as a planet, so that these economies can continue to be around in hundreds of years to come and for our children. So look, it's fantastic technology, but let's look after the planet and use this fourth industrial revolution to help us exist here, to then encourage the economies to go through it.
Well said. And with that, I would like to thank the GBBC team for putting such a fantastic event together and inviting us all here. Really appreciate it.